Recent sales of Tesla Incorporated shares by Cathie Wood's ARK Investment Management came as the stock continued to fall on investor worries over CEO Elon Musk's $44 billion buyouts of Twitter Incorporated. In a deal worth $8.8 million, the well-known money management firm sold 10,035 shares of the Musk-led company. Investors were caught off guard because Cathie Wood is one of Tesla's most visible advocates. The share price of Tesla has declined by almost 27% in the past month. However, Cathie Wood of ARK Investment Management claims that Wood has just lately increased her firm's target price. By 2026, each share of Tesla Incorporated would be worth $8,400. On April 14th, ARK introduced their newest, most expensive model yet, so it's puzzling why she'd sell her shares in the industry-leading maker of electric vehicles. To find out more, stay tuned. There is one name that keeps coming up when discussing the remarkable price history of Tesla stock and the purchasing and selling forces over the past 3 years: Katharina Wood. ARK Invest, headed by Cathie Wood, dumped nearly $100 million worth of Tesla's 0.64% shares after the company's strong first quarter reports. ARK, the leading innovation exchange-traded fund, dumped its holdings in Tesla for $70 million, or 0.52%. St. Petersburg, Florida-based investment firm ARK Invest has Tesla shares in 3 of its 6 exchange-traded funds, ETFs, including the ARK Innovation F, the ARK, and the ARK. Next-generation Internet Exchange-traded fund invest in autonomous technology and robotics. Woods had previously parted with 10% of her ARK. The $1.31 million were owned by the 3 EPs. The $1.15 billion in Tesla stock was traded. Earlier this week, investors pounced on Tesla stock when Musk failed to disclose the funding mechanism for his Twitter purchase. ARK has been making money off of selling Tesla vehicles despite the fact that the electric vehicle maker is not part of the deal. ARK's month-long profit-booking spree was put to an end when Tesla's stock plunged 11% in a single trading day earlier this month, because every time the price rose above $1,000, ARK would buy Tesla stock. ARK Invest has increased their price objective for Tesla from $3,000 by 2025 to $4,600 by 2026. Similar actions were taken by Wood in March, when he sold over $200 million in shares to invest in companies including Coinbase, Zoom, and Roblox, which have had their share prices fall by as much as 50% so far this year. According to the company's daily transaction records, 2 of ARK's funds, including its flagship ARK Innovation ETF, sold 52,335 shares of Tesla, indicating a stake of around $57.5 million, while the 3 funds later sold nearly $147.5 million. In the 2 weeks before to the sales, Tesla's stock had surged by more than 40% as the market rebounded from a sell-off prompted by geopolitical tensions. It was also ARK's first Tesla sales since the middle of the month of January. After the stock dropped about 30% for the year, the New York City investment firm still decided to purchase nearly 60,000 shares in the middle of February. ARK sold nearly $21 million worth of 6 other securities, including Tesla, Vertex Pharmaceuticals, and tech giant Splunk, despite the fact that Tesla was its best-selling stock. As we previously mentioned, she would replace them with a big holding in another top holding, Coinbase, which she bought for over $100 million at the same time period, and the streaming giant Roku, the Gen Z gaming site Roblox, and the former darling of the pandemic, Zoom. In comparison, Coinbase is down 19%, Roblox is down 48%, and Roku is down 42% from its all-time high in November, while Tesla shares were trading at over $1,104 at the time. Will ARK stock trying to unload his Tesla stock? ARK favors trading around the stock's volatility, purchasing at low prices, and selling when Woods anticipates a price decline. She elaborated by saying, "Because we expect to have another opportunity related with controversy to purchase the stock cheaper. We take profits when we see that analysts are hyperventilating over a stock, including Tesla." In October, Tesla held a $2.3 billion interest, or 11% of ARK's flagship fund. As of now, Tesla holds a $1.2 billion position, or 9%. According to recent rumors, ARK Invest top brass decided to unload some Tesla shares. This kind of language, however, is misleading. According to newer, more comprehensive reporting on the matter, it's not quite on target. The company did, in fact, sell some of its Tesla stock. Moving from 11% to 10% in fund weighting, for example, doesn't imply you're getting out of particular market equity because you're only selling a fraction of a percent. You're really cutting back little, no matter the motivation. Divesting does not necessarily indicate that the person selling the shares is worried about its future performance. Cathie and her coworkers are probably investing the money from the sale in new, higher-yielding ventures. Wall Street is becoming more and more skeptical about ARK claims would approach, which centers on disruptive innovation. Speculators who wagered against ARK's flagship fund made almost $1 billion in January, surpassing their total profit of $941 million for all of 2017. Wood said at the time that betting against American invention was insane. One of her detractors is Cyan Asset Management, a hedge firm run by investor Michael Burry, who famously called the 2007 housing market meltdown. Cyan Asset Management announced late last year that it had put options on $30 million worth of ARK shares, making it a negative investor in the company, before Tesla's massive stock price increased in a 2025-1 stock split and subsequent strength and lasting power as Elon Musk's innovation. Wood first emerged to attention as an extremely foresighted market analyst. However, Wood became a household name among investors once he established ARK Invest in 2014 and supposedly named these revolutionary funds after the biblical Ark of the Covenant. Wood has made it clear since the beginning of her Tesla coverage that the shared business model is a major draw for her. The similar ideals that propelled the success of both ARK Invest and Tesla. Both are predicated on the assumption that rapid technical progress can increase one's wealth. Each of them has a broad perspective on this idea and a variety of interests, rather than concentrating on a single technological advancement. Wood's early investment in Tesla, though, is notable for more than just that. Wood, when questioned about Tesla, said that the company was a value stock, indicating that its share price was lower than its intrinsic worth. According to Wood, Tesla stock has a lot of potentials to run after considering the company's profitability, revenue, and other factors. And that's exactly what happened. In the past 15 months or so, ARK Invest's massive bet on Tesla was in large part due to Wood's early confidence that the firm had much to offer the market. This is why she persuaded Elon Musk to keep the company public as he pondered a repurchase. Cathie Wood has predicted multiple future stock price increases for Tesla. When Tesla stock was trading about a quarter of what it is now, Wood forecasted that it would reach $4,000 per share by 2023. This was before the 5-to-1 split, remember. That means the equivalent share price after the split was $800, which was achieved 2 years earlier than she anticipated. The key takeaway is that Cathie Wood is still bullish on Tesla's long-term prospects, as seen by the transaction analysis and interviews. To begin, the fractional sale represented 0.26% of ARC's total assets. In the broad scheme of things, not very much at all. Therefore, the fact that Cathie Wood and her team exchanged some of their Tesla shares for another stock, for instance, is not always bad for Tesla. Simply said, it shows that increased potential can be gained through rebalancing diversification. Elsewhere, ARK also oversaw a nearly 800% increase in Tesla's stock price while he was CEO. Most people, however, are pessimistic that this expansion can be expected to continue year after year. It's reasonable to assume that as Tesla becomes more established in the market, it will follow a more conventional path of development. Wood reacted after a recent decline in Tesla's stock price, but interviews show he is still bullish about the company, as reported by Bloomberg. A few tweaks might help out. We need them to keep ourselves in check. The strongest bull markets I've ever seen are surrounded by walls of concern. What's steadfastness? We anticipate that ARK funds will maintain their optimistic stance on Tesla as the season develops. The constant stream of Tesla-related innovations only adds to the norm. Could you imagine selling your Tesla shares? Feel free to share your thoughts in the comments section.